Hey everybody, welcome back. Another video for you. Thank you as always for all of the support. If you want all of the content, go to patreon.com/Eric Draitser. I have a lot of videos up there. Some of them are free to the public, a lot of them are not. So please do go over there and check it out. So much to discuss with regard to Ukraine. And although obviously mainstream media is covering a lot of things, they tend to give you just a slice, just a very corporate kind of perspective. And so we want to try to broaden that perspective, obviously, from the left. That's what we do at Counterpunch. That's what I do at the Patreon. So, anyway, let's talk a little bit economics here. This is a very interesting time for international economic issues because, of course, all of the global financial architecture is sort of up in the air right now as Russia, a critical part of the global economy, is being increasingly isolated. It's, of course, taking its own countermeasures, including with regard to propping up its own currency, demanding payments in rubles, etc. I'm sure this is not news to anybody. So let's talk through some of the implications here. Really, what we're actually talking about, it's not so much about Russia and the sanctions and what's happening with regard to Ukraine. It's more broadly about the question of the dollar and the role that the dollar plays globally. We, of course, understand that the dollar is the reserve currency. It is basically the mechanism by which not only US imperialism continues to function, but it is the mechanism by which global trade is actually carried out. And so, what this means then is the question: are we now at a point in history where we're seeing a momentous and dramatic shift away from the dollar? I've talked about this briefly in some other videos, and I could probably speak at length about the issue, but just to put it in a very simple terms, the answer is no, but also yes, a little bit. In other words, no, the dollar's not going anywhere. No, the era of dollar dominance is not coming to an end. No, the isolation of Russia and increasing tensions with China are not necessarily going to fracture the entire global monetary system, nor are they going to reinvent everything since World War II. However, we do see these signals towards a major change in the global economic system, not necessarily in the total balance of power, but in the system, and especially the way in which it is administered and the way in which it affects especially the world's poorest. So we're going to talk about that here in the next couple of minutes. But let's talk a little bit about this issue of the end of the dollar. I mean, I feel like every couple of months somebody writes a think piece in a mainstream publication or even in a left-wing publication about the dollar hegemony, and the end of the dollar. But it's been, sort of predicted and guessed at for quite a long time. It's not just in the last month or so. It's been, well, at least over the last 10 years at various times we have heard this, whether it was the rise of the BRICS, the establishment of the Shanghai Cooperation Organization, the move towards including the Chinese currency and the IMF special drawing rights. There have been a number of the massive energy deals between Russia and China, the move away from dollar, holding all dollar cash reserves. All of these developments in recent years have led a lot of people, I would say, with some wishful thinking, to predict the end of the dollar. So now here we are in 2022, and it does seem that we are entering a period where the dollar is losing some of its influence, but it may not be for the reasons we might think. And it certainly isn't because of what's happened in the last 4 weeks. This is a much broader trend. So let's talk about it a little bit. Very interesting statements from Geeta Gopinath. She is the first deputy managing director at the IMF. She talked a lot about sanctions, the ultimate impact of the sanctions on Russia, or specifically the sanctions on Russia and the impact on the global economy. And she was talking about the emergence of what you might call smaller currency blocks. In other words, where right now we have a somewhat globalized system where the dollar is universally recognized and universally understood and exchangeable and convertible, etc., right? That we could be entering a period where, in limited circumstances, say for instance, Russia-China trade or Russia-India trade or whatever it might be, you would have the dollar essentially cut out of those transactions and the transactions carried out in the local currencies. Now, this is, of course, easily misinterpreted to be just like, well, that's it. U.S. imperialism is over. We are seeing an epoch, a new epoch dawning, etc. Right? This is not, in my view, not the way a serious analyst would look at this. It's certainly not the way that economic analysts are looking at it. So Gita Gopinath says that even with the small currency blocks emerging, quote, the dollar would remain the major global currency even in that landscape, but fragmentation at a smaller level is possible. Okay, so as I said, fragmentation meaning that you will have transactions carried out between countries that do not have anything to do with the United States that could potentially ditch dollars for local currencies, but that's not without its own problems. I'm going to get into that in a minute. Gita Gopinath from the IMF also says that, quote, we're already seeing that this phenomenon taking place with the renegotiation of the various trade currencies, right? She's again referring to the demand by Putin to be paid for Russian gas in rubles. Now, I've talked a little bit about this, and my main sort of angle on this is basically political more than economic. I couldn't get into all of the nuances of international energy trade and what laws might be applicable and so forth, but it does seem to me that this is one of the ways that Putin is trying to squeeze the Europeans by forcing them into what he knows is basically a no-win situation where they can't just pay for the gas in rubles, partially because it seems like that's not allowed by the current contracts, and also because it may not be so simple as just transferring dollars into rubles, particularly given the international sanctions. So Putin is trying to link the gas payments to the sanctions. And this is the way that he's doing it. It's obviously, this is a political move, not an economic move. But let's talk a little bit about why Russia is in such a vulnerable position given all of this. Despite everything that's happened since 2014, and despite the attempts by the Russians, at least they claim, to diversify away from the dollar, more than 1/5 of Russia's entire cash reserves were held in dollars. On the day that Russia invaded Ukraine. So that means then that despite the diversification, Russia is still heavily invested in dollars. And so the question then becomes, how do Russia, but especially other countries, how do they begin to diversify, if at all, away from dollars, right? So the question really is this going to lead other countries to diversify their own reserves, maybe because they fear that Putin might make the same demand of them? We've already seen India and Russia trying to work out a rupees and rubles trade relationship. We may see this, moving forward in the future. But that doesn't mean that it is necessarily financially beneficial, right? So let's talk a little bit about that. The further diversification of reserves held by central banks, this is obvious, right? The more that central banks of countries around the world are going to be fearful about ongoing economic conflict over all of this, they're going to want to diversify, and maybe they're going to want to have some extra rubles, some extra Australian dollars, some extra yen and euro and whatever it might be. So in order to sort of prevent against this, what the countries are basically going to have to do is begin accumulating currencies that you need for trade. If you are India, for example, you're going to have a vested interest in accumulating rubles. You know that the Russians are not going to sit around accepting dollars given everything. And you know that India is dependent upon Russia for military exports, for energy, for other aspects of their trade, fertilizers, agricultural products, etc. Right? So if you know that and you know this situation, then you know that India may be forced, whether they want to or not, to start stockpiling some rubles. Similarly, you have to note that the trend towards diversifying away from dollars is extremely slow. no matter how much it might be desired by, Bannon and Dugin and Putin and whomever who wants this for political reasons. On the economic front, you cannot simply just shift away your reserves from dollars. It's not possible. The dollar will continue to dominate for years to come. The issue is not that the dollar will no longer dominate. The issue is that the dollar will no longer be the only game in town. That might be the difference. And if the idea from the Putin sort of fan club is that all of this was waged as essentially a war against US dollar hegemony, well, that is a big nothing, because this war ain't going to change dollar hegemony. It is beginning to open up the possibility, though, that we could see the sort of move towards other smaller, what we would have called, less important global currencies. So let's talk about that. The dollar share in terms of the total the reserves globally of all of the different central banks, the dollar share has gone from roughly about 70% globally to about 60% globally, depending on which numbers you're looking at. It's somewhere between a 10 and 12% decline in the total share of global reserves that are held in dollars. So you're talking over 20 years. Okay, so it took 20 years for the dollar to go from 70% of global reserves to roughly 60% of global reserves. And there have been a lot of things that have happened in those 20 years, right? So I only point that out to illustrate that even under crisis conditions that we might be looking at now, the idea that this is going to be some kind of rapid transformation doesn't seem realistic. Obviously, there could be unpredictable, things that might happen. Who knows what could happen if, the globe is turned upside down by, half of Antarctica's ice sheet melting or something crazy and unforeseen. Well, I guess that wouldn't be unforeseen, but, world changing, right? But barring something of that scale, even the coronavirus, even the war in Ukraine is not going to fundamentally change how global cash reserves are held. So what are some of the reasons for the roughly 10 to 12% decline in global reserves held in dollars? Well, there's a bunch. Part of it is that over the last 20 years, China has become a huge global player, which has obviously made its currency increasingly important. So there is a greater use of the Chinese renminbi or yuan, and that has increased. But again, we want to just be mindful of the scale, because propagandists will try to tell you, look, the Chinese have emerged in the last 20 years. The global order is changing, blah, 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 by my book. Okay, let's look at the actual numbers. The global reserves held in Chinese currency are roughly 3%. 3% globally. It's a huge increase from what it was 20 years ago, but it's still a drop in the bucket. Okay, so we have the renminbi, the Chinese yuan, as this sort of illusory alternative to the dollar. It's not an alternative to the dollar. And the first people to tell you that would be the Chinese. They understand that. Now, here's what you have to keep in mind. And again, I just want to stress, part of the reason this is so important is because the dollar is central to US imperialism. US imperialism, global power, cannot exist if it's not backed by the hegemony of the dollar. Why is the dollar so powerful? For full convertibility. Okay, it can be freely converted into any currency. It can be freely converted into gold. Number two, open capital markets, right? The United States is considered to be, for lack of a better word, the beacon of open markets. This is not to say that I'm necessarily advocating for or against that, but this is how global investors see it. This is how the global economy sees it. And the third is strong and credible and trusted institutions. Now, again, for those of us who are critics of the United States, we don't really trust U.S. institutions in the political sense of the word. But those institutions that underwrite and sort of undergird the economic system, whether it is from the monetary side, from the regulatory side, or what have you. Globally, countries look at those institutions in the United States as the standard. The U.S. and the Europeans really do, in many ways still sort of set the bar for how institutions, oversight, regulatory authority, legal, infrastructure, all of these things that are required for what, capitalists like to call a good investment climate. Okay, so that's what makes the US so attractive. And I'm not even talking about the treasuries market, which is, of course, critical to the entire functioning globally. Whenever there's instability, the investors come flocking back to the US treasuries market. It is massive, it is vast, and it is extremely stable, relatively speaking. So this is all to say that where we identify shifts globally, we also need to identify just how entrenched the dollar really is and how much it's actually going to take to dislodge it. All right, I want to also give some attention to another piece also on the same subject, The End of Dollar Dominance by our friend Michael Roberts. The Next Recession WordPress is his site. He's been on Counterpunch Radio a number of times. Michael Roberts writes about dollar dominance in sort of similar terms to what I've been describing it, namely that while the dollar has declined in terms of its relative proportion of the global reserves, it is still without question the dominant method for international payments and international debt settlement. So there was this IMF paper that Roberts points to that I think actually the deputy managing director that I was referring to was also responsible for putting together on basically the creation of these, what you might call sort of I don't want to say creation, that's not the right word, but the minor currencies, the currencies that are not one of the big four: dollar, yen, euro, and IMF SDR, special drawing rights. It's not one of those. Instead, it is the minor currencies. You have the Australian dollar, the Canadian dollar, the Chinese yuan, the Korean won, the Singapore dollar, the Swedish krona. All of these currencies have seen big increases globally over the last few years. Michael Roberts has a roughly 12% drop in US dollar reserves globally. So whether it's 10%, 11%, 12%, it's somewhere in that range. But it's not that the dollar is being replaced by the renminbi, the Chinese currency. It's being replaced by the Canadian, by the Australian, I mean, to some extent the Chinese, but the Korean, the Singapore. You get the idea, right? What we see then is countries beginning to diversify into those currencies that make the most sense for them, right? This is a major, major shift because it goes against this sort of dominant thinking that a lot of this sort of Putin cheerleaders would want to have you believe, namely that what we're looking at is basically a West-East economic split where the West, the United States, the Europeans and the British and the Japanese or whatever would be in one economic system, and the Russians and the Chinese and others would be in a totally different economic system. And that's a very simple and neat way of thinking about it, but it's just not reality. As Michael Roberts, I think, correctly points to, it's not that we're going to see a shift to a West versus East. Instead, we're going to see a shift to a fragmentation of currency reserves and blocks. Okay, and this fragmentation is going to be particularly painful for the world's poor. This is going to be tremendously bad for world peace. It is going to be tremendously bad for the poorest countries in the world, who are now going to be essentially squeezed even more, as it's going to be more difficult for them to conduct business, more difficult for them to reap the benefits of trade, etc. Right? With the dollar, at least there is something of a standard. As this begins to fragment, the poorest countries in the world are going to be hit the hardest. And this is particularly important because you have, in the United States, you have rising interest rates, you have a strong dollar. You also have, at the very same time, the decoupling, right? The decoupling of a global trading system. And at least according to the World Trade Organization, this would reduce global welfare by 2040 compared to the baseline by about 5%. losses would be largest of more than 10% in low-income regions that benefit most from positive technology spillovers from trade. In other words, the global poor benefits from at least some aspects of global trade, namely, well, as it said, technological spillover. Right? What happens when the Chinese are no longer going to do business in the same way? What happens when other countries are going to look at trade as being more national rather than international? Well, it seems like a lot of countries are going to be left out in the cold. The World Trade Organization raising the red flag for 15 years from now, 18 years from now, a loss of 5% globally. Think about how many people are thrown into poverty by something like that. You're talking hundreds of millions of people globally who will suffer, right? And for what exactly? Do we want the dollar to remain hegemonic? Of course we do not. At the same time, do we want the global economic system to fracture and fragment into these competing power blocks with, dozens of different currencies and trade being conducted in all these different currencies? What happens to countries that can't access them? What happens if they can't come up with those reserves? I mean, there's a lot of questions that obviously international trade experts are going to probably spend the next few years trying to parse through all of this. The bottom line, for me at least, is, for me, it's the politics above all. The bottom line for me is that it is more of a public relations campaign than an actual economic reality to say that the end of the dollar is here. Instead, what it's really about is about justifying a political perspective, justifying some of the things that are happening globally, whether they're good or bad, in the context of undermining the dollar and undermining U.S. hegemony. Did Putin wage war in Ukraine to destroy the dollar? That's conspiracy craziness. That's nonsense. But did Putin maybe think that it might give an extra little push towards some of these trends that were already in process for the last 15 years? Possibly, quite possibly. At the same time, think about the damage to the people in Russia, the Russian economy. There's a lot of different factors involved here. The bottom line is Russia, out of necessity, is going to move away from the dollar. Other countries that are tied to Russia are going to diversify. Are they going to dump their dollars? No. But are they going to look to safeguard themselves by having a little bit more variety in their reserves? It seems that way. I think as far as I'm concerned, it remains to be seen just what the political ramifications of this will be on the imperial level between the United States and its competing, rivals. At the localized level, this could be disaster for the world's poor, and obviously something we're going to keep an eye on. Okay, we have to leave it there. I will talk to you again next time. Patreon.com/Eric Draitser. More videos over there. Check them out.